Buy your house to live in. It's a property. You're building equity, invest in the 401k, Roth IRAs, and one that just kills me, do the 401k so you can get the match. The match sucks, guys. It's not that great. You could make 10-15% plus per year by being an investor as opposed to single digits being a homeowner. Now let's settle it. Buying or renting, is this the biggest inhibitor to financial freedom? For the longest time, owning a home has been part of the American dream. This financial decision may seem to be appealing and highly marketable to home mortgage lenders out there and realtors, but should you buy a house, or are you simply being influenced by the real estate broker or other close friends trying to outdo each other? Now, in the minds of many, it represents a source of security, stability. I know my parents bug me all the time. When am I going to buy a house?
I sound a failure.
Now, you guys have all heard it. People say renting is throwing money away, and I'm going to somewhat demystify this and somewhat detach it to allow you to see what it is and think for yourself. Many people see homeownership as a financial investment where they get to use the house and investing in something that supposedly never goes down. But should you rent or buy? This is a very individual and personal decision. And this is why I love personal finance, because it is so personal. If you haven't joined our list before, join at thewealthelevator.com/club and book an individual call with myself, and we can go through your situation if home buying or renting is part of that in the future. Let's dig a little bit deeper in this. What do I do? Let's use myself as an example, or what I've done in the past. I live here in Hawaii. Renting a $1 million house, which is somewhat of a starter home out here, for $3,000, $4,000 a month makes more sense. Now, if you think about it, my landlord is only making about 3.5, maybe 4% on their money, and that does not include any taxes, insurance, capital expenses that might come up. Probably wondering how I break this down. I'm a big math guy. You basically take the amount of income, which is $30,000, $40,000, and then you divide it by the $1 million, and that's how you get that percentage right there. And that's a pretty bad, crappy return. For those of you guys who are looking for really stable investments out there, real estate, stocks, somewhat risky, right? You get higher returns, but you take a baseline of life insurance, for example, you're getting 4 to 5% there tax-free. Just comparing it with something like that, and again, in this example, we're not taking into account anything breaking on the house like the roof or other expenses that might come up that might make that return probably the 1 to 2% range. Now, I get it. This is the quantum that I think a lot of people in the financial independence FIRE world, we get confused because we think that buying a house to live in, you get the personal usage out of it too. But what I'm saying here, if you detach yourself from that for a moment, is to take the money that you would be sinking into a down payment into a house and the future mortgage payments and put it into buying single family homes, like how I started on the first floor of the Wealth Elevator. If you haven't yet, check out my book. We've got the stages of wealth building, and if you're watching this YouTube channel, you might be on the first floor, you might be on the third floor if you're already an accredited investor. So make sure you figure out where you are at this point. But I'm talking to a lot of folks out there who haven't yet bought their first house. So I'm assuming you're a non-accredited investor, and for a lot of you folks out there, it makes better sense to get a higher return in investments. Sure, it is more risky, but when you're younger, you've got more time to recover and to get exposure to the upside of the market, whether you do stocks, mutual funds, which I'm not a huge fan of. I personally prefer to invest in real estate or apartments, where I can get cash flow, reduce taxes, and get appreciation with the leverage in those properties. The big difference owning your own house is you're the sucker in full paying down your mortgage, where when you are the landlord or the passive investor in a rental property or an apartment syndication deal, the tenants are paying down your principal. And that is the huge differential. We're not going to get into the tax benefits. I think tax benefits are generally stronger when you get into syndications and private placements because it can take advantage of bonus depreciation laws. More information about that, go to thewealthelevator.com/tax. For now, you're seeing it at a high level. Like, why would I want to make my money grow at under 5% in my house? I might as well just get a savings bond or invest in life insurance for that. I would rather get a much higher return elsewhere and then arbitrage the rest of the money into the rent payments. One thing to look at is the rent to value ratio of 1% or higher. This is a key differential mark that we look for in our investments so that we are able to cash flow after expenses, especially if you're living in a high priced area, Hawaii, Boston, New York, Seattle, pretty much all of California, folks. You're going to be much under this 1% threshold, and that essentially is no bueno, not good. It is like throwing money down the drain. But now I'm going to guess what you're thinking. It's a property. You're building equity, property value. My spouse will kill me if I do this. Just putting that in early, right? You're probably going to get a lot of pushback from your spouse. They'll say renting is like flushing your money down the toilet. But look at this holistically here. It's just another line item in your personal finances. Sophisticated Sophisticated investors look for numbers, right? If you buy multiple rental properties, another line item to make up for that differential, that's really the name of the game here. That's the big idea. Other ideas, flexibility and mobility. If it's no longer that you're working at a company forever, a lot of people, myself included, have changed a lot of jobs in the past. You don't know what's going to happen, and it's best to be somewhat flexible as opposed to be locked down in a certain area. You don't know how many kids you're going to have, or if they want to get into better school districts or go to private schools. So again, another big driver of be more flexible. And also liquidity in difficult times. When the money is in your house, it's hard to get it, especially in high interest times through your HELOC. Better to have your money in real estate properties where you're getting the cash flow from rental income. Some of you guys have already bought your house out there. Julia says that about 44% of American homeowners have some form of buyer's remorse. Maybe that's you, but it's not too late, right? Maybe your property has appreciated a little bit. Maybe you could sell it and implement this strategy of arbitraging your personal finances by going on the offense and investing. I would be remiss to not go over the disadvantages. I've been renting a long time myself. You can't hang things on the wall and you don't have that feeling of that this is home. But I'll be the first to say that me and my family, we've gotten used to this lifestyle. And if we can arbitrage our money elsewhere or make a whole bunch of money in investments and you hit that hockey stick of growth, get to that second, third floor of the wealth elevator, get to $3-4 million net worth, trust me, I could care less if I have true ownership of this house. I'd rather just be wealthy and have money than have this false sense of security with owning my house. Issues that happen, rent increases. From 2000 to 2003, rents were skyrocketing at that point. Same can be said with taxes and insurance, which also have been skyrocketing, really hitting the individual owners. Taxes. A lot of people say you want to have a mortgage so you can write off the mortgage interest, which I think is really silly. Like, why would you want to pay $100 to get back $10 to $30 of tax savings off of that based on where your tax brackets are? Throw this out. Whether you own your own home to live in and you're getting the mortgage interest deduction, you're going to be getting the same mortgage interest reduction on the other side when you are an investor. That's a huge wash. In fact, when you're a landlord or an investor, you're getting additional tax benefits by all the expenses other than the simple mortgage interest tax. Those people who push that stuff, mortgage lenders, it's dumb, to be honest. Like, it's a lame reason to be a homeowner. There's a lot of calculators out there comparing the difference. I haven't found one really that good because a lot of them just don't take into account the big picture here. You could make 10-15% plus per year by being a landlord or an investor, as opposed to just single digits by being a homeowner. A lot of those calculators will go into brokers' fees, application fees, security deposits, get real nitty gritty here, but a lot of that is small things, folks. It is the small rocks. The big rocks is I could make 10-15% more a year and get additional tax benefits from the operations, whereas I'm just making low single digits by owning my own property. I broke down some of these on my website, thewealthelevator.com/house, if you wanted to geek out on it a little bit more. But again, I think the biggest thing is you're going to have to talk to your spouse. And at least I can offer my experience. I talked to my spouse about this whole idea. I think you got to give them that vision of the future. You got to be a leader here, guys, or gals. A lot of my investors are gals too. Somebody here has to have a compelling vision and communicate it, which I get it. It's hard. When I had this talk with my spouse, I already had almost a dozen rental properties at that point. You may not have the clout to be able to communicate this and lead your family. To sum this up, the advantages of home ownership, depending on the area, mortgage payments can be lower than renting. Unlike renting, you can live there as long as you want, as long as you make your monthly payment. So a component on certainty here. But we know that if you hold on to certainty, there's usually a trade-off with that. Fixed rate mortgage means that your monthly costs are predictable there too, and your interest in property taxes and the mortgages are tax deductible. BS alert there. It also is on the other side too when you're a landlord or investor. Where it makes sense to own your house is that this is a sort of forced piggy bank. And I think that most people are really bad at saving and budgeting their money. Therefore, they should buy their house. But if you're somebody out there who keeps a good budget that can save at least $5,000-$10,000 per year, consider what I'm selling you and go on the offense and invest the money instead. Or maybe just buy a smaller house to make the spouse happy so they don't leave you, and then invest the rest. Real quickly, the disadvantages of home ownership: it's very long-term financial commitment, monthly payments, some places cheaper than renting, and then purchasing a property requires that huge down payment, which in some cases, like if you're buying a property in Hawaii, you may need a $250,000 down payment, which you could probably go buy 5 properties out in the Midwest cash or with a very small loan on that and be cash flowing maybe a few $100, $500 $10 a month on that. If you want to get in buying rental properties, I have a free remote rental e-course in our members portal. To access that, you can go to thewealthelevator.com/turnkey. And to round out the other disadvantages, any maintenance and repairs are your responsibility. The value of the home may fall. You may have terrible neighbors. You may be in a gentrifying area or a declining area. So you take the risks on that side. Life happens. Like, most people don't live in their house more than 10 years. It's silly to pay all these lender fees, all these broker fees, which are usually hidden in there. And now you see why all these guys try to get you to transact and buy the American dream. Some of you folks out there might have already bought the house. That's what I did back in 2009. And then I switched it to a rental property. And that was where I got this taste of cash flow. Changed my life. Absolutely changed my life. I bought another duplex in Seattle. And then a few years later in 2015, I had 11 of these rental properties. And then I started to become more of an accredited investor, started to learn about syndications and private placements where I didn't have to be the landlord and I could just invest passively. And that was when I went from the first floor of the wealth elevator to the second floor of the wealth elevator. For more information about that and more of a high level view of this wealth building journey that I've been on, check out the wealth elevator on Amazon. And if you guys buy it, write a nice review, email it to us, team@thewealthelevator.com. I'll hook you up with the free MP3 audio version and the PDF for free. But in closing, I think a lot of the information that we have on this channel is a little bit alternative. But what I've learned from higher net worth accredited investors, detaching myself from what you hear out there, buy your house to live in, invest in the 401k, Roth IRAs, and the one that just kills me so much is do the 401k so you can get the match. The match sucks, guys. It's not that great. I don't want to pop your bubble, but at least I want to bring you back to par. Come back to my website, thewealthelevator.com, check out my book, and then at least educate yourself so you can think for yourself here. A lot of this information has changed my life. I've learned it from other people a lot smarter and wiser than myself, and I hope to try and distill it down to you folks out there. Like this video, and any other questions you have, put in the comment below, and we'll see you guys on the next video. Bye.